Is the UK property market about to crash? If the property market does crash, who are the winners and who are the losers? And how do you make sure you're on the right side of the equation? And actually, does it even matter what happens to property prices? And why should you listen to me? Well, my name's Simon Zucchi. I'm the founder of Crowd Property and the Property Investors Network. Crowd Property is a peer-to-peer lending platform, and we have lent almost £450 million to support £800 million worth of developments. So I know quite a bit about lending and borrowing money. And as the founder of the Property Investors Network, which was the very first pioneering networking meeting in the UK, especially for property investors, I've been helping people like you to become more successful investors for the last 22 years. And what that means is I was not only actively investing, but I was also teaching hundreds of other people how to be successful investors during the last property market crash that was in 2008 as a result of the global financial crisis, which started in 2007. And many of the people who are predicting property market crashes, they weren't even investing at that time, and they don't know what actually happens during a property market crash. Well, I have practical experience of not only coming through that and surviving that, but also thriving in that. Because as I said, there are definitely losers and there are definitely winners when we get a property market crash. I'm going to show you exactly what you should be doing if the property market crashes. Now, why are people saying the property market is going to crash? Well, a lot of talk about these cycles in property, the 17-year cycle, and people saying, well, actually, it's about time the property market crashes. And we've certainly had a correction in prices. We had a peak during 2022, 2023, which was an unexpected boom during the COVID years. And that very much was a peak in UK property market. And generally around the country, we've seen prices start to come down. Now, it very much depends where you live and what kind of property we're talking about. Certainly commercial property has come down dramatically in value, but also some residential property and some prime areas, such as some parts of London, we've seen big decreases in asking prices for property. What does this mean? Are we going to see a property market crash? On the other hand, we see the banks offering things like 100% mortgages and talking about changing the multiplier they apply to your income when they work out affordability. Why are they doing that? Well, because prices are quite high, people are struggling to raise the deposits or struggling to get the mortgages they need. And so they're making it easier for people to borrow money. So is that a good thing? Does that mean they're confident and they don't think the market's going to crash? Well, let's think back to 2007 and what caused the global financial crisis and then the ensuing property market crash. At that time, there was some very irresponsible lending and also irresponsible borrowing. At the time, you could get a 90% buy-to-let mortgage. So if you were buying a £100,000 property, you could get a £90,000 mortgage, which you only had to put a 10% deposit in. If you're buying your own home, if you had a good enough income, you could buy a £100,000 property and actually get a £125,000 mortgage. So your mortgage was more than the purchase price of the property. Why? Well, you could have some money for furniture, people spent it on holidays, cars, and some people took that money and invested into property. So not only was there very high loan to value borrowing, but they also had what's called self-certification mortgages. People just signed to say that they could afford to pay. And unfortunately, many people who couldn't really afford to pay the mortgages on their own homes or their investments were buying properties. And because property prices were booming in the early 2000s up until the peak in 2007, the mistake that many investors made is they bought properties that were sometimes low money down investments, sometimes no money down, but they weren't actually good investments because they weren't creating cash flow. Now, imagine this. Imagine someone says, well, I have to subsidize my properties a little bit each month, which is what many investors were doing. But they were happy with that because they felt the values were going up so much. They thought that the value was going up much more than the subsidy they were making. So in a way, they were looking at their properties a bit like a saving scheme. They put a bit of money in, but by the end of the year, the property's worth more money. Now that works if you can afford to subsidize those properties, and it works if the property market keeps going up. And property prices were so high in 2007, I actually stopped buying property because they didn't really stack up anymore. But everyone was piling into property. And sometimes you think maybe it's not a good thing to get into if everybody's, if your taxi driver, your hairdresser, they're all talking about their latest investment property, everyone's doing it, maybe it's a bit too late. Maybe it's a bit of a bubble. And so prices were probably going to adjust, they were going to correct, but it was so severe because of the global financial crisis. When these banks realized they had all this debt that was never going to be paid back, they just stopped lending. And that's what caused the prices to really come down in 2008. It was almost impossible to get mortgages and to buy properties. Now, there were other ways of buying property. We used creative strategies such as lease options are great when the market's coming down, by the way. But most people were not looking to buy, they were panicking. Imagine this, imagine you've got a handful of properties that have been going up in value, you think you're really wealthy, you don't mind subsidizing them, and suddenly the market changes and comes down. So not only are you subsidizing these properties, but they're not worth what you bought them for, and suddenly you throw in the keys and you just want to get out. This is why so many people were dumping property. And those of us who were buying, my students who were learning about property investing, it was some of the very best buying opportunities. And I remember people being really nervous saying, Simon, are you sure we should be buying now? Prices are coming down. And here's the thing. When prices are coming down, it's easier to negotiate and get a better deal than when prices are going up. And most sellers expect that someone's going to come along and offer them more money for their property, which is exactly what happened, as you may remember, during the COVID years. There was this amazing boom caused because of the stamp duty holiday, caused because of the bounce back loans, which were designed to help businesses, but a lot of that money found its way into the property market. So with this amazing boom in prices and people paying over the asking price, it's very difficult for us to find good deals when the price is booming. So as investors, we're looking to build our portfolio, buying when the market's coming down is actually a better strategy. Now, if the market does crash, when is the best time for you to buy? In theory, people say, well, a bit like the stock market, maybe we should wait till it hits the bottom, and when it hits the bottom, the lowest possible price, that's when we should buy. And in theory, that kind of makes sense. But in practice, nobody knows when it's hit the bottom. And in reality, when everyone thinks it's hit the bottom, and the media and the general public and sellers all think it's hit the bottom, what's going to happen next to prices? Prices will start to come up again. And sellers will hold on to those properties in the positive expectation that someone is going to come and pay more money for the property. So rather than when prices start to go up, it's actually when prices are still coming down that is the best time to buy. So if there is a property market crash, that's actually great news. There are winners and there are losers in the property market crash, and you can absolutely become a winner if you listen carefully to what I say in this video. Now, very often people say, yeah, but Simon, if property prices come down, we're losing money, we're losing lots of equity. And in theory, yes, if you sold a property, you bought it here and you sold it here at a lower price, of course, you're crystallizing the loss and you are going to be losing money. But if you follow the rules I share in my book, Property Magic, the 5 golden rules that I wrote at the end of 2007 into early 2008, and the book came out first time in 2008. My 5 golden rules were based on my experience and the mistakes I had made. And by that time, I'd been teaching other people for about 4 years. I noticed many people make similar mistakes. And I wanted to come up with some guidelines that would help any investor to minimize the risks and maximize the return by following these 5 golden rules. So I'm sure you, if you watch this channel, I'm sure you know what they are, but very quickly, rule number 1, we want to buy for motivated sellers, people who really want to sell, which means they're going to be flexible on the price and all the terms of the sale. Number 2, we only want to buy property in an area of strong rental demand to make sure we can quickly and easily rent it out if the current tenants move out. Number 3, and this is so important, we only buy properties that make us positive cash flow. At the end of the month, we would take the rent, less the mortgage, the insurance, the management, any fees and costs, there must be money left over. This was the big mistake many investors made in 2007. They were buying properties that didn't produce cash flow because they felt the market would keep going up in value, which of course It doesn't do. It corrects at some point. So rule number 4 is linked to that, because if the market comes down and you have to sell, you've got a problem. But if you don't have to sell because you follow rule number 2, you know you could rent it out, and rule number 3 is going to make you cash flow, you can afford to hold for the long term and wait till the market recovers again. So golden rule number 4 is we hold for the long term. And in the UK, we live on an island with a limited amount of accommodation and an increasing population. There is not enough accommodation. The government, in their manifesto, the Labour government said, we're going to build 1.5 million homes over 5 years. Now, of course, governments don't actually build homes. They're supposed to stimulate the environment, the economy for people like us and bigger house builders to come and build those homes. But we're a year in now, and there's not been 300,000 homes built in the last year, probably less than 200,000. And there's no way the government are going to hit that target. And the Conservatives were just the same. They said they were going to build 1.6 million. It's never going to happen. The biggest lie in politics. But the reason they're saying we need those houses is because there's this underlying demand. That's why I personally don't think we're going to have a property market crash. There were lots of other experts out there, some of whom I rate, some of whom I don't rate, but a lot of them are saying the property market is going to crash. Now, whether this is just scaremongering, I don't know. I don't think it's going to crash. But if it does crash, if you follow the 5 golden rules, you find a product that stacks up today, the numbers work today, it gives you positive cash flow, and you're prepared to hold for the long term, it doesn't matter if you buy now and in 6 months or a year, it's worth less money. As long as you're not selling that property, as long as you're holding for the long term. And then golden rule number 5 is have a cash buffer. Have some money put aside, so if there are unexpected expenses, you can get those bills covered, you can get the property, get it rented out again, and get that income coming in. As long as money's coming into your property, it should be an asset that puts money into your pocket. If there's no rental income coming in, that's then a liability that's going to take money out of your pocket. And if you don't pay your mortgage, ultimately you can get repossessed. So make sure you follow the 5 golden rules. Very, very important. I am excited about property investing right now in the UK. Is the property market going to crash? I don't know. And to be honest, I don't care. All the properties I've got, I'm planning to hold long term, and I'm using this as the opportunity, if it does crash, to massively grow my portfolio. And I suggest you should do the same with that. Learn the lessons from history. When the market comes down, when most people are selling, trying to get out, that is the very best opportunity if you get in. But don't wait. I know some people who wait. I'm going to wait until a certain point in time. We don't know if it's ever going to happen. I personally think, and I might be completely wrong here, I don't know, but I think we're going to see the property market start to recover and start to go up again in 2026 because we have this underlying demand. I think people will probably have better mortgage rates by then. I think investors will be used to this 5% stamp duty we have to pay now. And I think people say, right, now's the time to get back into the market. So I think we're going to see property prices come up generally on average in 2026. There are always some areas that will do better than others. Some will do worse than others. But you could be an absolute winner in the property investing game if you educate yourself, if you take action and find great deals that stack up today, make cash flow today. So it doesn't really matter, in my view, if the property market crashes. Will it crash? I have no idea. I don't have a crystal ball. No one does. I don't think it will. I might be wrong. But if it does, fantastic. I'm going to get on it. If it doesn't, no problem. My properties keep going up in value anyway. So the message is educate yourself, get out there, invest in property. In the summer, and I'm filming this in August 2025, it's a quiet time. There are many people off on holiday, relaxing, which is fine, which is great to spend time with family, but now is a really good time to get out there, to double your action, to really double down, to make sure you're finding these motivated sellers. And most people get back into the swing of things in September. But some people, they've had such a great time off in the summer, they've lost momentum. It takes time to get going, and they don't really get going till October. Then you've got half term and things. Then it's November. Before you know it, it's Christmas. Most investors miss the second half of the year. And they only really get going again in January. Think, right, now I'm going to get going, which is why I think prices will probably start to come up in 2026 when more people come back into the market. But all I'm saying is now is such a good opportunity. And we hold a big event, Property Magic Live, in mid-September to get people back on track, to get them going, to get them motivated and make the most of the rest of the year. So if you're interested in that, there'll be a link below this video. Come and click and find out about that event, Property Magic Live. We have lots of other training as well, or speak to my team so we can find the very best training to make sure you have the knowledge and skills and confidence to make the most of the property market. As ever, I hope you enjoyed watching this video. Come and comment below. Let me know, what do you think is going to happen to the property? Is it going to go up? Is it going to stay the same, or is it going to come down in the next 12 months? I'd love to know your view or any other comments you've got. Please come and comment below. If you like the video, please like the video. Make sure you subscribe to the YouTube channel and hit the bell icon to make sure you're notified anytime a new video comes out. So that's it from me. Until the next time, I encourage you to invest with knowledge, invest with skill.